so we're in the fifth week of 2024, and this also happens to be a week in which interim budget was presented. Given that it is an election year, it's not a full budget, and there are some sparks in the market because of that. So the market did react to a certain extent positively. Now, the Nifty was up 2.35% week on week. So it first was a flat response, and then it turned out to be positive because primarily driven by the infrastructure and the fiscal deficit prudence that was given in the budget. So primarily the sectors which did very well during this week and in response to the budget: energy, infrastructure, and metals. Primarily, as I said, again because of the effect on these sectors coming in from the guidance that was given during the budget. And another thing that we're going to cover in this particular video is the Q3 results of Larsen and Toubro, which also happens to be one of the infrastructure companies. Now, what are the interim budget highlights? Let us look at some of them. The first one being the fiscal deficit, which is at 5.8, slightly lower than anticipated, and what is projected for 2024-25 is 5.1%. This discipline will result in better availability of capital at lower interest rates, thereby boosting banks and NBFCs and the economy overall. So primarily the institutions will be able to borrow money at a cheaper cost, which will result in being able to drive better results in the economy. That's what the guidance is coming through. Now, in terms of what was given as guidance in the budget, one is, of course, there is a hike of 11.1% in capital expenditure. So it comes to 11.11 lakh crores. Now, this significant increase in capital expenditure will definitely help the infrastructure development, and it comes down to sectors like construction, materials, and engineering, because finally what is happening, that you're building more roads, you're building more ports. Of course, these are supposed to act as a nervous system for the economy, but even to build them in the first place, it is going to impact these sectors. So that's what one of the primary focus for this interim budget was, focus on hike in the capital expenditure. Now, the companies which are primarily in the infrastructure space, one is of course Larsen and Toubro. We're going to see their quarterly results. The market share is around 22.5%. IRB Infrastructure, which is another 12%, GMR Infrastructure, and Adani Ports. So these are some companies which are expected to benefit from the guidance given for higher capex in 24-25. Now, the other part of it was also the rooftops panels, because energy is one of the primary ways to solve, bring in equity in terms of bringing out people from below poverty line or deprived classes. And India being a tropical country, I think there is a lot of focus now building around on to solving energy problem using the solar panels. So government plans to provide around 1 crore rural houses with free solar power via solar rooftop. That was one major announcement, and the companies that definitely you can expect to benefit from this are Adani Green, NHPC, SGVN, and Tata Power. Now, some of these companies are already trading at a significant premium. Of course, the guidance would be to track these companies, and if you find something which is at the right price, then build positions. At this point in time, there's no strong recommendation for any one of these, because each one of them is trading at a fairly high PE and the valuations wise. But definitely we will be tracking it, and if we build positions in any of this, we'll be sharing that knowledge. Another area which is bound to grow is the PM Awas Yojana. The way at least we can see that the real estate sector in India for the higher income group or the middle class has definitely boomed over the last 15 to 20 years, primarily driven by availability of easy loans. So 20 years back, it was a dream for many middle class people to have their own homes, and when people would start working in 5 to 7 years, they would dream of making their own homes. But now, of course, that segment is fully taken care of. So it's time that the housing moves to the next level, and that's where a lot of focus is. So it's somewhere in the bottom of the pyramid and the middle of the pyramid, wherein the PM of Awas Yojana is working, and it plans to build 2 crore new houses, which should bring in a lot of you know loans and infrastructure development for some of the companies which are in this segment. So one of them being the LIC Housing Finance, PNB, and HUDCO. Now LIC definitely, if you look at it from the current valuations perspective, seems reasonable. We haven't checked that deeply on PNB Housing. We would be checking that. HUDCO at this point in time, given that it has had a run up of more than 150% in the last 6 to 9 months, I think it's very difficult to now build position on this. It's still running, but if you hold already this stock, then you should maybe retain it and exit at the right time, but it's definitely very expensive. LIC Housing Finance seems to be more reasonably priced, and we would be doing a more detailed analysis on that. So that was primarily from a policy perspective and the sectors which are benefiting, the infrastructure, and the Awas Yojana being the primary one, the housing infrastructure one. So now we move to the disinvestment policy. So the government for 24-25, the initial target has been set to 50,000 crores, and contenders for disinvestment in 25 are IDBI Bank, BPCL, Shipping Corporation of India, CCA, Concor, and BML. So watch out for these stocks, and if there are stocks which have reasonable valuation, then work through them, because whenever government is disinvesting, there is a clear pattern that's coming out. Because if you look at HUDCO also, government has been disinvesting 7% every 6 months into it for the last 2 to 3 years, but the stock is also moving up, because there is something that works in favor when the stock becomes from a fully owned public sector to a private sector. So for some reason the stock goes up, and similarly over here, if you're getting it at a reasonable price, then we will be tracking some of these stocks and we'll share the knowledge. So from 24 perspective, government disinvested approximately 32,709 crores. This is slightly higher than the 30,000 crore revised target that was given, but it's still short of the 51,000 crore that was initially thought as the primary target. Now what came out as disinvestment, primarily Coal India 5% stake has been diluted, Rail Vikas Nigam Limited, SGVN, and IRCON. So you look at all of these stocks, they have had a significant run up before they have been disinvested. But it is still, I would say, Coal India is at a reasonable valuations. Definitely we are building positions. If you want to build positions, then study it and build some positions over there. So that was what the report card looked like for the 24 FY24 from a disinvestment perspective. Let's move on to the next segment, which is the Q3 results, and primarily the one that we are bringing up today is the Larsen and Toubro. So the revenue was up by 19%, profit was also up by 15.5%, but analyst and the street was expecting it to be a lot more than that. So it's missed the target by a significant number, and that's why the stock has taken a beating of around 8 to 10% after it has been, the results have come out. The new orders are definitely good, looking good. So whatever is the promise that's being given from a perspective of infrastructure development is translating into business for this company. It's 25% year on year. So new orders significantly, the order book has significantly grown. EBITDA margins maintained at 10.5%, and international business has contributed to 44% of the revenue. So from a guidance perspective, the company and the management believes that given that there is more focus on infrastructure, it should bring in the required the revenue into the L&T books also. And the private sector is also expected to bring in a lot of revenue into the company. And the other fact is that we just saw previously in the previous slide that the new order book is looking 25%. It grew by 25%. So definitely it's adding to the revenue that is being considered. Now, there are challenges in terms of the fact that the metal cost and the underlying raw input cost is going up significantly, so it definitely impacts the margins in a big manner. And there is geopolitical uncertainty because of the Russia-Ukraine war, there is Israel, and then there is the China thing that keeps happening. So definitely when it comes to infrastructure company, at any point in time there is global uncertainty or any kind of an uncertainty flares up, it's going to impact companies like this. So management has given this guidance. Now from a perspective of overall understanding of L&T results, so it has gone down by 9% as I mentioned earlier. So it has moved from it's expected to be 3,400 crores as the profitability, but it turned out to be 2,947. So it significantly missed the margins, and that's why this beating. Now from a valuations perspective, on a trailing market, it's trading at a PE of 36.7%, 36.7, and the profit growth is 26%. So the market is giving a premium, and it is expected to give more in terms of the growth. What is expected was 26%, whereas it came out to be 15.5. So there is definitely a miss, and that's why there is a beating. Now from a recommendation perspective, given that there is focus on the capex, there is growth in the order book, it's a good idea to retain the stock if you are already holding it, and see whenever it consolidates to buy on dips. That's the overall recommendation. So for L&T, it's a mixed bag in a way, because budget is very positive. There is overall growth in the order book. The profitability has grown, but not as per the analyst expectations and the market expectations. So it's kind of hold the stock, and once it starts consolidating, maybe build more positions. So that was this week. The first week of February, the budgets just announced, primarily the focus on the capex as well as on the housing infrastructure. This is an interim budget. Over the next week, probably the markets should remain from being consolidating at its current level to slightly positive is the way we would kind of predict it, because there's a lot of optimism that has come into the market after the election results, and now in this budget, which sets a clear tone that the fiscal deficit prudence is there, as well as there's a lot of focus on infrastructure. So the market should remain from a consolidated position to a positive position. That's what we believe. Have a good week, and I'll see you in the next week. Bye for now.